Well, we made it. Welcome back to your favorite comedy finance channel. Don't forget to like, share, subscribe. There's a lot going on, and I was taking a look at a few different things. I'm going to be going over the CPI report, next Fed meeting, and the next CPI report that looks like, I don't know, it's getting a bit spooky, well, first and foremost, let's get past these disclaimers. First and foremost, this is a rated R channel, okay? Secondly, we could go to zero by tonight, okay? And it'll be your fault, not mine. Don't forget, this is not financial advice, okay? You could buy right now, and we could go to zero right after you buy, okay? Now keep in mind, my favorite picks are still the same stuff. I like Arc Block ABT. I saw we just busted through $4. I still feel like because it's a token that's, competing with things like Cosmos, DOT, there's another one I'm trying to think of. There's another one that it's competing with. But anyways, look, when Cosmos and DOT first did the run up, and keep in mind, they got funded by the same people that are funding Arc Block. It ran anywhere between like 8 billion, 15 billion in market cap. If we get that type of number, and let's say we fail, and we get like 3 billion or 5 billion of a market cap, you're still looking at double digit Arc Block. It's like 30, 50 bucks. If we get to, Cosmos and Polkadot levels, that's 80, 150, and that's still pretty minuscule. And Xiao Feng, he was the original backer of both Polkadot and Cosmos. And he's even the guy that backed Vitalik off of his couch, so that's a big thing for any of you guys that like ETH. The ETH founder was backed by Xiao Feng as well. So I do think that among him and among other billionaires that are backing Arc Block, I am still very bullish on it. Another pick is LCX. A lot of people don't know that LCX has AVAX Tokenomics. It's about a 770 million coin cap. And if you take a look at the chart, it's pretty beastie right now. It's really on a springboard. And I know a lot of people sit there and like, but Eon, I'm really tired. It's such a painful hold. Well, maybe it's because your unemployed ass is not stacking anymore. Typically when I'm in the markets, I like to make money and I put the money into the market. I don't buy something once and then I hold and hope for the best. I continuously build my portfolio over time. So I've been pretty happy with the performance of LCX, given the fact that we got in about 4-6 cents. But not only that, keep in mind with regulations coming into play, Binance going down, a lot of these other exchanges like KuCoin going down, it's becoming more and more like one of the last exchanges that has an exchange token with good tokenomics. Because typically when you're looking at let's say Be True, or you're looking at Crow tokens, any of these other exchange tokens, they're typically really diluted with large supplies. And LCX is pretty much of a banger for me. It's a World Economic Forum backed token, fully regulated, and for it to have a 770 million coin cap under 30 cents, that's not too bad when you're getting 3x every dollar going up. And I've been thinking $3-5 at the very minimum on that. And that was before the exchanges started going down. With the exchanges going down, I really do feel like it could go $10-15 plus, just like FTX did or BNB back in the day. So I'm very bullish on that. And, Dragon Chain, that's going to be a big play for me. I've held it for over 2 years now. I really like that company. I like the project. I like Joe, the CEO, Patriot. He's a very badass guy. On top of that, he's supposed to be interviewing with BitBoy. So that's going to be pretty cool to get a little bit more exposure. Their court case is due in July. And again, it's an ERC20. If Gary Gensler has sat there and said ETH isn't a security, how is he going to call it ERC20 a security, especially when Dragon Chain has been used for products and services? You can't buy McDonald's with equities, okay? You could buy McDonald's with currencies, So besides that, I do like NCT Polyswarm. Don't forget about that. Cybersecurity is going to be a big thing for me. It's 2 cents. It's a 2 billion coin cap. And even though it has a larger supply, because I got in pretty early, I do feel like $2 max on that will be good. That's kind of where my targets are. I want to get through these picks so I can go into economics. So just bear with me here as I remember everything. What's another one that we were looking at? ALF. ALF, just like ArcBlock has DID framework, also has its own dApp store. So that's going to be a big play. So I do like the tokenomics on that. It's a 500 million coin cap, 285 circulating. ALF just activated staking opportunities. So because you're able to stake and earn Liberté points, I do see scalability happen because, you know, a lot of these investors are starting to stake the token, and because you're staking, less selling happens, and you're going to get price action because they're earning yield for their holdings. So because they're earning yield for their holdings, their bags are getting bigger without, you know, using capital to buy more bags. So I do see scalability happening. Math token is another one. That one's backed by CZ himself. I did see that he follows it on Twitter. Binance is one of the original investors on that. So I do like that token as well. It's a 200 million coin cap. It's still under 100 million of a market cap. So I'm very beastie on that. And that should have good scalability. All the coins that I take a look at, I'm typically aiming for, you know, higher single digit numbers, if not double digit to triple digit numbers is typically what I'm aiming at. I do like using ETH or Bitcoin as a store of value. There's nothing wrong with that. I think ArcBlock is still a good store of value as it emerges as a 3.0 project. So that'll go good. Trying to get past all this nonsense so I could talk about economics. That's really what I want to talk about, honestly, because, you know, the Fed, I feel, is really setting us up right now with really setting us up for a catch-22. Like, I don't think anybody is going to be able to be in or out of this market when this bet gets made. And I'm going to go over that. I'm going to go over that in a little bit. But let's just kind of go over the quick basics. Okay. The last time I checked, the dollar was at 104.5. I don't think it's going to be there for that much longer. And keep in mind, because the dollar has a higher valuation right now, and I don't know what country you're from, if your currency is at a higher buying power at this time, use it while you got it. Because right now we're inside of a bond market crisis. Okay. And the bond market's crashing right now. Okay. So as the bond market's crashing, we're going to be going into a currency crisis. Okay. For those of you that are familiar with stable coins or familiar with staker tokens, okay, the one way admins or governments try to advertise investors for US dollar debt or whatever debt your country is from, they up the yield. They up the yield 4 or 5%, sometimes higher, to attract investors to lend money. So they start selling off treasuries and offering 4 or 5% yield based on 3 months all the way up to 5, 30 years or whatever the case. Right now, for short term, you could still get 5% for a few months. I don't know who's going to do that, but even when you're going long term, I don't know who would do a 20 or 30 year treasury, but that's 4%. Okay. CPI came out at 3.4% recently, which for whatever reason, you know, Wall Street was saying that this was good news. It wasn't good news to me. CPI was at 3.5%. We went down to 3.4%. I don't see a deal there. You know, if bond yields are being offered at 4 or 5% and inflation is expected to go higher, then what investor is going to be investing in U.S. treasuries when it's pretty much a falling knife? Okay. And not to mention, China has been dumping a lot of bonds. Now, I know a lot of emphasis goes on China, but they don't really have a big bag of U.S. treasuries anymore. I do want to emphasize on that because the media constantly tries to get you to pay attention to China, but I really have been telling my members for the last 2 years and change to pay attention to Japan, because Japan is the one that's going to be dumping substantial amounts of US dollar bonds in order to save their peg. Now, they're not the only country doing this. China's doing this in a variety of other countries, but Japan is the one that I'm watching because they are the holder of the most US dollar debt. I think they're holding about 1.2 trillion the last time I checked. So, you know, in order to defend their currency, and keep in mind when you're watching the exchange rate between the USD and the yen, you're looking at 151, 155, and 158. At that 155, 158 mark, Japan's dumping. And I do feel, now hear me out, okay? There's a bunch of variables I've gone over on OddApp, okay? OddApp is a software we built. It's available on Google and Apple stores. It's $100 a month right now, okay? But every Wednesday, 10 p.m. Eastern Standard Time, okay, we get together and we have a voice conference. I do a forecast. I always make an economic forecast. I let you know what I'm dealing with, what I'm looking at, how I feel, and, you know, anything else, okay? But again, OddApp, it's a software application I built. It's military grade encryption. You can't extract data. You can't screenshot out of it. It's AES 256 military grade. And we built it from the ground level up. Okay. But again, it's on Apple and Google stores. But last meeting, we were talking about what is going to happen these next meetings. Okay. The meetings are kind of merged together with the CPI report, which I think is a red flag. This is kind of what I was worried about. Like when I was talking to you guys on the conference or yesterday, I was a little bit concerned with the way they structured these dates, because the Fed meeting is the 11th of June and the 12th of June. Okay, so they're going to tell you if they're going to hike rate, they're going to pause rates, or they're going to rate cut. I don't think they're going to rate cut personally. But the CPI report we just got was good news, and it came out to 3.4%, which is not a big deal. I don't see anything going on there. However, the next CPI report comes out June 12th. June 12th, and the Fed meeting is on June 12th. So it's not like, for those of my boys out there that are leverage trading, it's not like you could make this bet. Okay, you're going to have to make this bet blindfolded. Okay, for the hodlers out there, we don't need to worry about this. But, for those of you that are making a trade, this is going to be a tough call. Okay, I'm going to tell you what I think. You guys make your own bet. Okay, I got substantial amounts of money in the market. I've had substantial amounts of money in the market since 2019, 2020. And this was before, back in the day when we used to have cycles when everybody was like, nope, sell everything and run out. Okay, I don't think that's the thing to do this time. You have institutions in the crypto sector now. You have ETFs. You have a lot of money coming in, a lot of cash flow coming into the markets. I don't think you're never going to see bottoms again. I think you're going to see a continuously bigger pull in these cycles. And I don't think the corrections are going to be as big as they used to be. So yes, I'm going to tell you this time, I feel it's going to be different for real this time. Your shout out to all my dinosaurs out there. Okay. So, what I do feel is going to happen. Okay. And I'm going to stick to this. I like to make a call, and I want to just make this call of a story because the last 2 years I've been talking about it, but I didn't think it was going to unfold like this. Okay. I think what's going to happen is CPI is going to be higher than 3.4%, but by the time the 12th comes. Okay. And that's going to be revealed during the Fed meeting. And it's going to be like, oh my gosh, the rate's way higher than we thought it was going to be. Because they gave us good news yesterday, okay? They gave us good news, minus 0.10%. But they're just fluffing us up, okay? They're fluffing us up, okay? And I think what's going to end up happening is we're going to get a hot CPI report in June, and what's going to end up happening is the Fed's going to end up hiking rates. But I still feel we're going to end up going up. And the reason why I do think we're going to end up going up is because it doesn't matter whether or not the Fed crashes the dollar this time. Okay. Because the dollar is going to crash no matter what the Fed does. And let me tell you why. Okay. Because it doesn't matter. I think the prices are priced in the way they sit. But the reason why I think the dollar is going to start crashing from here on out is because if they hike rates, then they're going to manipulate the dollar at a higher valuation. That's going to make more countries sell off US dollar bonds. But the key holder here is going to be Japan. Japan's going to not put up with that, and they're going to crash the dollar themselves. But that's going to give them enough room to rate cut later. I think that's what's going to happen, because I think it'll be a fake out, like everything's going to look good, and they're going to give us bad news. And then they're going to do a rate hike. That's kind of what I see coming. And it could happen the other way. It really doesn't matter to me. But I do feel like they're going to do a rate hike. And because the dollar valuation is going to be overextended, you're going to get too many countries dumping US dollar bonds. China's already dumping a lot. As you can see, they're doing currency swaps for gold. Gold's already at like $2,400. That's a huge sign, guys. Like, one thing I really dislike about crypto investors is their lack of diversity. A lot of them really think that crypto is the only place to be. But, I've always been crypto stocks, precious metals, FX, I've always paid attention to currency exchange rates. I've always paid attention to the metals market, because that gives you an idea what's going to happen to different assets, whether it's real estate or cryptocurrency. Okay. Gold, silver at these prices is becoming scary. Okay. Now I know everyone thinks number going up is good, But when you're looking at the metal market and the numbers are going high like that, it's a signal. Okay, it's a signal. And I do feel the crypto market is priced in for where it needs to be. I think that it's not very high. I do think because it's an emerging market, we're not going to get any sort of huge impact the way people think. I do think we could see a fracture, but I do think we'll see a slingshot. Okay. And the reason why I say this is because I think the fracture could be created by the Fed. But when this fracture happens, the US dollar will still be overvalued. And this is going to cause Japan or other countries, especially Japan, to dump US dollar bonds like wildfire. And when they do that, that's going to crash the dollar to substantial amounts where assets will rise in value anyways. Okay, that's what I think is going to happen. We could look at this the other way. If we have rate cuts or we do a rate pause, I still think the dollar is going to crash because the dollar is still overextended. We're still at 104.5. The exchange rate between USD and the yen is still 155. And it's still high. So, I do think this is going to happen no matter what. But I do think that the Fed is going to save face by saying, hey, look, we did the right thing. But look, Japan did this. Our own ally did this. I think that's the story. I think that's what the story is going to be. It could be a simple, that's the theatrics that I see coming. But let's say if we don't see those theatrics and it's just a cut and dry, we cut interest rates, we pause rates, and that's why the dollar crashed. Okay, well, then we could blame the Fed. And it could make sense given that Congress is continuously trying to abolish the Fed. Could you imagine, I'm telling you, it's funny, because sometimes when I hear some of these small hat jokes, it's hilarious because it's like you sit here and you hear some stupid shit like the Congress, Congress, this is full of fucking foreign state operatives sitting there saying, I'm going to write up a thing to abolish the Fed. We're going to abolish our friends, that type of bullshit. It's just, it's funny. But, that could leave room for, oh, look, they messed this up. That's why we need to abolish. And that's why we need a new currency. That's why we need a new currency swap. There could be, I could see that happening too. Okay. So we'll see. We'll see. However, that's not good news. Okay. A lot of people think, oh, well, a new currency, or let's say we get a new reserve currency. Oh, this is good news. It's not good news. Okay. Because if you get a new reserve currency, your valuations on your assets are going to be different. Okay. What happens if you get a new currency and it's 100x stronger than the USD and they say, hey, you got to switch out your USD for this new currency, this new shiny currency, except every $100 that we give you, or every $100 you give us, we'll give you $1 of the new currency. Governments do this dumb shit all the time. Okay. It's possible. I don't think it's going to happen, though. I do think that they're weighing on inflated asset prices because governments don't change. Okay. You could go see, I don't know about you guys, but I love history. And, a lot of you guys, you might look at me and, you see the way I dress or the way I look and you might not know me or you think you know me. Okay. But you don't know what's in this head. Okay. But I'm a big historian. I love history. I really do. I study religion in depth. I study history in depth, and governments don't fucking change all the way back to Rome. Okay. When governments submerge themselves in debt, the only way out of debt is to hyperinflate their currency or inflate their currency to high heaven so they could pay off mass amounts of the debt deficit with inflated asset prices. And that's what I see coming. And that makes sense if we get a Trump in office. He is the debt king. He's the bankruptcy king, right? So, you have to understand that, the USD is a basket of currencies, and a currency or money is like frequency, and frequency is elastic. Okay. And when you think about elasticity, I can't say it the right way, but when you stretch the dollar, or when you squeeze the dollar, like right now, there's dollar shortages. That's why the dollar's at 104.5. So you got to squeeze. That's why you got that overvaluation. That's why you got governments dumping USD instead of waiting for the yield. The yields have never been higher. Yields are 4 or 5%. So why are these countries dumping bonds? Well, because the dollar's at 104.5. If they could claim, and keep in mind, these countries were buying up dollars when it was 70, 80 cents in 2020, 2021. They're making 20, 30% on all that money they took in. They bought all that US dollar debt and now they're dumping it back on the market. Okay. They're dumping it back on the market. And because they see the dollar at an overvaluation, why the fuck am I going to wait for 4 or 5% on my bond yield? Right. Especially if we know inflation is going higher. There's a reason why gold's going up. Okay. But governments do not change. They do the same shit to everybody. They do the same shit to every civilization. You could go as far back as you want. Okay. But when they submerge themselves in debt, they'll just submerge themselves in more debt, because the more they dilute the currency, the more they dilute the debt. And if they could dilute the debt, that means that it costs more debt, it costs more currency, more fiat to buy each asset. So if you were a person that bought real estate in 2018, 2017, 2020, whatever. Well, I wouldn't say 2020, but maybe. Depending on when you bought, you bought it with a stronger dollar. And, as the dollar started overvaluing, it changes your asset prices, because right now the dollar is strong, so it buys more asset. It's all relevant. But again, you stretch the dollar, you stretch debt out. And because you're stretching the dollars, and because it costs us more dollars to pay for an asset, that means your asset prices, like real estate, crypto assets, are going up. Right now, the dollar is strong. The dollar is at 104.5. And what's funny, see, what's weird about the economy is experiencing inflation. But in the FX market, we're experiencing deflation. Okay, that's what we're experiencing. It's deflation. But what we're waiting for is that bubble pop. When that bubble pops, the debt bubble, and keep in mind, debt is fiat. Debt is fiat. Debt is dollars. Debt is whatever currency you play with. That's debt. Every dollar is a debt note. When those debt notes blow up, okay, asset prices are going to go through the roof, and you're going to see 30 to 40% decline from ATH on USD currency. That means assets are going to go through the roof. So I do feel the next 9 to 12 months, we're in bullish territory. But over the next 69 days, okay, over the next 69 days, I'm kind of weary. I do see a fracture coming, okay, and I do think that's what's going to happen at first. And does that mean I'm exiting the market? No. In fact, I'd rather be in the market than out of the market, okay? A lot of people are going to be setting some orders and hoping they get a really good deal and all that, and that's great. But for me, I don't care. I'm already diversified. Stocks I don't really play with anymore, but I got precious metals, got my crypto, and I'll be fine with that. But I do think that we're going to be heading towards this area that you need to pay attention to, because look at how they set it up. Okay, CPI report is on the 12th. Okay, that's the most important CPI report we're going to get this year. And then the Fed meeting is on the 12th. They're fucked up, It really, I'm telling you, for those of my boys out there, leverage trading, you know what I'm talking about, So, be careful. But I was talking to a lot of people, and I'm just like, look, I really do feel like a lot of people need to set themselves up. Money is time. Okay. Money is time. So make sure you allocate money for time in case we do see a fracture, because maybe you might get a good dip, but also maybe we might go through some sideways trending. We might see a fracture over the next 60 days. And because of that, take care of yourself first. Okay. So, just be prepared. I do, like I said, we're in bullish territory, and the macro setting of things, I do see things going up. That's where I'm at. I can't really think. Let me see if I'm forgetting anything. I want to try to make each video short, because, back in the day when I used to talk as slow as I could, my videos would be like an hour. So I'm trying to spit out as much data as I can. So sorry if you got to replay this nonstop. Besides that, from what I see, right now, rates at 5.5%. I still think we're too low. I think we're going to go higher. I really do think interest rates are continuously going to go higher. You really think about where we're at. There's really no reason to cut rates. Why would we cut rates? If inflation's at 3.4% and inflation's not going to get any better, we haven't been doing anything, okay? Whenever the Fed makes a movement, whenever the Fed makes a cut and they make a pause, you're not going to feel those effects for 90 days. So think about how many pauses we've already been through. 2, 3, something like that. And those are some months apart now, okay? And Inflation's not moving. It's sticky. Remember, like they used to say, if fucking Jerome, when Jerome Bowles, he says, "Oh man, well, inflation's a little, it's a little sticky." I'm not saying stag, but I'm saying some inflation. You know, we're not thinking about it. You know, it's a little bit sticky inflation. I see them lifting the inflation target before they could get to 2% ever again. They'll lift it to 3-4% before they could get back to 2% and make it a new standard. That's what I see happening. I'm trying to think of anything else. I don't want to leave you guys hanging too much. But again, look, guys, for those of you that have been enjoying the video, don't forget to like, share, subscribe. Don't forget to like this video. If you haven't joined us on OddApp, it's on Apple and Google stores. If you want to know if MYC is real, if you want to know if MYC is a builder, you want to know if I'm a software developer, you could easily go on Apple and Google stores right now and look up ODD app. OddApp stands for on-demand data. Okay. If you don't think that this is on-demand data, I don't know what to tell you. I just data bombed you in 25 minutes. A lot of shit, right? So let me go through your comments real quick. You know, I do miss you guys. I'll go through a few of your comments. Jason Key says, Captain Dion, I salute you, sir. So many calls, so many dollars. Absolutely. Brian the Nickel says, it'll be clean bongs and wet thongs all 2025. Don't forget. That's correct, Brian. Michelle says, I haven't been wearing underwear all year. That is very bullish news for MYC, Michelle. Philly Brian says, then wait for the zombies to appear. Is that what you're saying? Earthwalker says, divorce now, make money later before it's too late. Sean MYC says it's goated for life. Don't forget. Moses says, win MYC to a penny. Redbeard says, my wife hasn't backsassed me since 2023 since watching MYC. That's good to hear, sir. That's good to hear. Let's see. Here's see another one here. Jason says, I haven't done laundry for years since joining MYC. My wife continuously does dishes and the laundry and no backsass either. That's another example. That's very good news. So guys, look, I will catch you on the next one. Don't forget to like, share, subscribe. If you haven't found me on Twitter, it's MYC_network. If you want to know what I'm doing 24/7, 369, I'm on OddApp every day, 24/7, 369, like I said. I will catch you guys later. I love you guys, miss you guys. I'm sorry that I don't do too many videos, but you know, but I do like talking to you guys. I really do. You know, I like to data bomb you guys whenever I get the chance and whenever I kind of feel that, you know, that roar for me. You know, a lot of things going on, you know, just a lot of shit going on, you know, but, you know, just keep me in your prayers, you know, and to keep people in your prayers, every single one of them. You know, not everybody is going to make it. Okay. So don't forget to like, share, subscribe. I will catch you on the next one.